Hey everyone, I'm so excited about today's episode, but first want to let you know that this show is made possible by Fortune Builders. I also want to take a minute to invite you guys to an amazing opportunity to learn from some of the top experts in the real estate industry about how to get started in real estate or scale an existing business to the next level. Fortune Builders is hosting a one-day webinar to help you learn about real estate investing in today's market. So throughout the show, if you feel like you're ready to get started, go to FortuneBuildersShow.com to register. Again, that's FortuneBuildersShow.com to register. If you're watching on YouTube or Facebook, you'll find a link right below the show so you can get there that way as well. And please remember that the content of this show and every show is for educational purposes only. Myself or our guests are not going to be providing any legal, financial, or professional advice. If we share specific results, they are attributed to an individual or a business, and we can't guarantee the results will happen for you, those earnings or the income will match those figures. The bottom line is there's always risk when investing in real estate. You can make a lot of money or you can lose a lot of money, and it's hard work. But that doesn't mean we can't have fun doing it. So let's get into today's episode.
From a team that has $1 billion in real estate investment experience. A show to help you learn the strategies and systems it takes to get started investing in real estate. This is the Fortune Builders Real Estate Investing Show.
Hello everyone, this is JD Asajan back in the booth with you here at the Fortune Builders Real Estate Investing Show. It's been a moment. We had our summer break, if you will, and we're back at it. Happy to be here. Great show planned for you. I've got my confidant, good friend, brother-in-law, awesome real estate investor, and just all-around good guy, Dan Wright, joining us today. Yeah, you're welcome, Dan. We're going to have a lot of fun. We're going to cover a very timely topic around real estate, the state of the market. What's going on right now? We're going to break it down into a couple of key categories. Before we get to that, as always, we have our words of the week, ladies and gentlemen, boys and girls, cats and dogs. The Fed. Now, some of you know what that means, and some of you don't. We're not going to spend the whole show talking about the Fed, but the Federal Reserve System is a lot about what's driving what's going on. So we are going to talk about that, what that means, and get into it. So we've got a great show planned. Let's go ahead and get into it. All right, welcome back. We're going to jump right in because we got a lot to cover in a short time. Dan, thanks again for being here.
JD, it's always good to be in the booth with you.
It's a lot of fun.
Back in the booth, as
Back in the booth. We spend a lot of time having fun, working together, traveling together, being that we're brother-in-laws. Families spend a lot of time, and we get a lot done. And we're going to do that on this particular episode. We're going to cover a lot. So specifically talking about the real estate market and sort of the state of the union, if you will, I thought we'd break it down into some key categories, ladies and gentlemen. Okay? What happened? We're gonna discuss that. What happened, what's happening right now, and then what may happen, what we think is going to happen, what we hope will happen, and then really what are we doing as real estate investors to navigate through all the dynamics of what's gone on and what's going on. So that's how we're going to break it down. We're going to discuss and talk about. I know you got some stats that you'll share too, related to the topics that we're going to cover. Mm-hmm. So let's go ahead and start with what happened. Well, the Earth was created back in some time period ago. We're not going to go back that far. The caveman developed the first domicile. No, we're not going to go back that far. We're gonna talk about post-COVID, right? We're gonna start there and kind of go big picture around what happened. And feel free to jump in with regards to that. I mean, when COVID hit, as with many people, the real estate market really took a pause. And for us specifically at CT Homes, we buy, fix, and sell. On the CT Home side, residential, small multifamily real estate. On the Equity Street side, obviously commercial properties, locally and nationally. There was a pause, but shortly thereafter, the real estate market really took off.
Took off in a big way.
Took off in a big
Yeah.
way. Rates kind of continued to go down from that point. The Fed, which I'll use the word of the week now and define it if you go online, it's the Federal Reserve System. I think most people know that name. But if you look at their definition, and this is a simple definition, a group of officials, the Fed, who control the U.S. Government's central banking system. They also adjust and have policy around interest rates, which is specifically one of the key drivers of our industry of real estate. So they were bringing rates down post-COVID, which in conjunction with pricing starting to go up, and that's changed now, but prices went up, inventory started to go down, and it created a frenzy. People wanted to, with rates down, could buy more. They wanted to get out and find their dream home or their open space. And for us and many other people, we had a hard time keeping inventory on the shelf.
Yeah, it was a seller's market.
It was a
It's
strong seller's market.
You know, for investors, it was a great time. For agents that were working with that had the listings, like that was awesome. It was not a good time to be a buyer or a buyer's agent.
Challenging. you were going into battle with probably many other people
Yeah.
and multiple offers. And
I'm pretty sure a lot of kids have been named after you, right? Because a lot of agents say, "JD, we'll even name our first kid after you."
I did get that offered to me once or twice, and I said, to be fair, you know, I want one JD. Put your offer in, and we'll review it. We'll review it with the others. But it was a good time to be. It still is a good time to be in real estate. But during those years, basically post-COVID, up until what's transpired most recently, you know, I don't want to say it was easy to flip a home, but it was easier because in most markets, inventory was down, rates were down, and so people were out there just buying. Crazy.
Yeah. As an investor, we just had a lot of leeway.
Yeah.
You know, it's like you can make mistakes and they don't really show, you know, because the market makes up for it. But when the market gets back to where it is now, you know, that's when you got to button things up, which we'll talk about today.
Yep. And so during that time, inflation started to rise, right? Prices of the goods that we consume started to go up, and that can't maintain. But you know, you and I specifically had a lot of conversations, and I shared some on the different shows that we've done. You know, even during that time, you got to stay true to your principles, and you got to stay true to your numbers, and not get. It's hard not to, especially when it was that frenzy, to get caught up in, you know, every house that we're selling is selling for more than even we expected and could justify. But we stayed pretty true to looking at our numbers. What is the market telling us? Not what we hope we can get or what we may be able to get with this frenzy, but really, you know, true to our numbers. And that served us well.
Right. Yeah. You know, we talked about it as, you know, we have the systems in place. Yeah. And just like you said, it was so easy and tempting to deviate from the systems because it was like printing money. You know, the Fed was printing money. They actually were.
Yes.
And for, you know, 6 months, 8 months, you know, we almost were too. You know, it's like you can list anything and it's just going to sell for whatever. Everybody's waiving their appraisal contingency. And some values just didn't make sense. And that's when we saw things are changing. It's like if we can't make sense of values and that somebody would pay that much for that, we're going to be seeing a shift pretty soon.
Yep. It's not sustainable.
It's not sustainable. That's right.
And I think everyone knew that, but as you get into that sort of cycle, it's pretty easy to forget what life was like prior to that when you're in the industry and things are cranking. But it always changes. Markets always change. And so I think, you know, that is, for a lot of us, not a secret there, right? We're in the market or we're thinking about getting into the market. So that's what happened post-COVID. But you know, as a result of all those things, inflation went up dramatically, and that's something that our central banking system, the Fed, has to control. That's one of their main jobs. Yeah. So if we kind of shift into, you know, what is happening now, or, you know, we'll say over the last, you know, month to 2 months, what's happening to change that? Well, the Federal Reserve has a couple of key things, really, one, especially when it comes to real estate, well, the whole market, one key thing that they can do to curb inflation, bring inflation down, is to raise interest rates.
Yeah, because we were at zero for
a long time,
year and a half maybe.
Yeah.
So yeah, looking back, maybe they should have raised it a little quicker, but it's hard, you know.
Yeah.
It's like
that's not
too soon. We're still in a pandemic technically.
Exactly.
And I don't even know. Are we anymore?
I don't know the definition of when we're in or not in one anymore. If I was going to answer that, I would say we're not, but you know, that I may be wrong there.
Yeah,
so
we could be,
I'm not qualified to make that definition. But the Fed they had to step in, and they had to slow down inflation. And I know anyone who was in the market, researching, reading, knew that was coming. It came pretty quick.
Very quick.
Like overnight type of situation.
Yeah, because we were talking for weeks, always watching interest rates and the overall economy. It's like, I always think back to college 20 plus years ago, JD.
Wow.
Yeah, so long ago. Economics class, it's like, what a joke of a class when you're in college, but looking back, it's what an important class and how...
I would have listened a little more now, knowing what I know.
I wouldn't have stopped at 101. I would have gone a little more.
Yeah, so what's happening, or what has happened most recently? Well, the Fed steps in, they increase, they want to slow down inflation, so they raise rates, and they raised them dramatically very quickly.
Yeah.
And so rates go up, right? The real estate market, because that's what this show revolves around, is the real estate market, it starts to slow down. So when rates go up, people's buying power comes down. At the same time, for a good period there, as rates went up, prices were still creeping up, right? So people can't afford as much. It costs, from their perspective, a lot more to borrow than what it did a few days ago or a few weeks ago. I mean, historically, rates are still low. But when you're looking at borrowing money below 3%, and now all of a sudden you're looking at borrowing money in 5% range.
Yeah. Historically low. That's the key word.
That's the key word.
Lenders love to say it's still historically low, which it is. But prices are historically high.
Yeah.
And
true.
And those two things right now in this market, it can't last forever, and we see that breaking point.
Yeah.
And that's what we're going to talk about.
And so that's what's happening now, right? Rates have gone up. The Fed met most recently, and they raised another 75 basis points. And so they need to slow down inflation. They raise rates. That rates, especially since 2008, 2009. When the mortgage meltdown happened, the real estate market is extremely tightly tied to interest rates.
Sensitive to it.
Very sensitive. I like that word.
Maybe
very
that's
sensitive.
The word of the week.
Maybe that is the word of the week. Sensitive. So rates went up pretty dramatically, and the market slows down, right? And we felt that certainly with our CT Homes inventory, where over a weekend of active homes, we'd get a ton of showings, and my phone would blow up from texts and calls from agents. And almost overnight, that changed, because buyers are like, whoa, is the market going to crash? How high are rates going to go? The Fed is still working on their inflation curbing, but what they've done has definitely slowed down inflation. I saw a post on social media in our San Diego County. Someone saw gas prices below $5.
Where's that at? Tell me.
I think it was Escondido, if I remember correctly. But not the places I get gas.
Yeah,
it's still
for sure.
higher, but they're starting to come down, right? So at the same time, pricing in terms of homes, we're starting to see some slowdown and some decreases for the first time in a long time on the common sites like Zillow, Redfin, Trulia. We're starting to see more red arrows pointing down. Which of course is a function of slowing down inflation and rates going up.
Yep.
So
and when it all happened, like you said, it happened fast. Buyers lost, their monthly payment went up 50% to the previous year. So with the higher price and the higher interest rate, that monthly payment was double.
It's a massive jump.
And so put yourself as a buyer.
Yeah. If you had a place to live and didn't need, like, you could stay there, you're going to probably stay there because you're paying twice as much.
Yep. So we lose buyers, and just going back bigger picture for this year, because pretty much January, February rates were still around 3.
Yeah.
Market still on fire, still very good. End of February, the war starts. So we're talking about the Fed and real estate, but really it's a global thing that affects your current market. So we have a war that starts, that hurts the fuel. So if fuel prices go up, which you talked about, and really energy. Again, I'm not an economist, JD.
Yeah, I'm not either.
Just thinking of how a normal person thinks. Energy, when that goes up, everything goes up.
Yeah.
So everything went up really quick. And then the Fed starts, right? So we have a war, we have mass shootings happening.
Yeah, a lot going on.
That was happening
Heavy stuff.
And consumer confidence tanks. And so
Big
that's
time.
why, looking back, it's like, man, it really changed so quick. But a lot of things happened at once.
Yeah.
Which caused that. So
Good points. And that's why we're talking about this. There's not one solution, not one thing to talk about, one cause. But I've been asked quite a bit through friends and family, people in the industry, people within our organization. Hey, why don't you guys jump on and do a podcast on, what's going on, what happened, what's happening, right? What we see moving forward, and that's where this show is derived from. And I think you nailed it. A big part of the real estate market is that changing, of course, is the dynamics of rates going up and the Fed's doing what they need to do to curb inflation and all of that. But all of that creates someone's confidence in terms of going out and buying in that kind of dynamic down, right? And so buyers, they didn't disappear, but they're major pause on going out to look because we don't know what's coming.
Yeah, they're on the fence, and then you're watching the news and all you hear is the R word, recession. Nobody wants to buy at the top of the market, and let's just wait and see what happens. So that's kind of like that zone we got into these last couple months. Our buyers are just waiting. They're out there. We didn't go from having, we got down to I think 1,900 homes of inventory
here in the county,
locally in San Diego, and now it tripled pretty quickly. It's like people are just waiting to see.
And at the end of the show, for all of you watching and or listening, we'll have some key takeaways. What are we doing now? What are we looking at on a daily basis? So we'll get to all that here pretty quickly. But I'll pause here and say, like, if you're sitting there watching, listening, and you're wanting more information from us, what's the latest things we're doing to find properties? What are the latest things that we're doing to fund those properties, etc.? You can go to FortuneBuildersShow.com, FortuneBuildersShow.com to get more information about registering for and signing up for one of our trainings with our key instructors. And we'll talk on those trainings about, what are we doing lately and now to find properties? How are we funding those properties? So that's a great resource. Also, for those of you in the community, we have some events coming up. We have the next, what we call the boot camp summits, where we have a number of different events going on over the course of, a week to sometimes 10 days. The next summit is in Orlando, coming up very quickly. The dates are the 17th through the 21st. For those of you that have access to the Mastery site, you can go to the Mastery site to register for that. We also have our annual Super Conference coming up here at the end of the year. Now, for the last number of years, we've done it virtually for obvious reasons, but we are doing it live this year. It is in Las Vegas, Nevada, and it's called Ignite. Many of you listening and watching have been to an Ignite, and I also know many of you have not. It is the best event that we do all year because it is the largest event we do all year. Dan, you've been a number of times. We cover so many topics, not just around acquisitions or funding or rehabbing or wholesaling or online marketing, all those and much, much more. We bring in some great keynote speakers. This year Ignite's a little bit earlier than it has been in the past, as from the request of the community. And so it is in November the 11th through the 13th. Okay, so if you want to get more information about going to Ignite, you can go to realestateignite.com online on that web browser that you go to and get more information. So there's some resources for you that you can get more information about either events that we have coming up and also our trainings around acquisitions and funding, etc. So to circle back to what we've been discussing, since COVID have been in a very strong seller's market, and then very quickly it changed. What I would say to a buyer's market.
It feels like it.
You are more in the driver's seat.
Statistically, they'd say it's not. But it is.
Yes, correct. And we're talking big picture on this show because I know not all of you invest in San Diego and you're in different places across the country. But there a lot of what we're talking about, and we're going to wrap the show with, really come down to understanding your submarket. Your dynamics and your economics in your market. What's the job situation like? Are there new employers that are moving in? Like looking at those kinds of things, right, which we'll be wrapping the show with. What are those key things? Because I can take you to one zip code in San Diego that is extremely dead right now, and not a lot of homes are trading quickly, or many of them are trading below their ask price. And we can go across town and go to zip codes where that's not the case, and it's still like buyers need to be there, want to be there. They're paying more than list price.
And some
So-
zip codes are right next to each other.
Exactly.
Getting completely different results. So, before we keep going, JD, I have to quiz you here.
Okay.
Okay.
Wait. We got quiz time. I feel a tremendous amount of pressure right now.
Yes, you should, because this is you might have to guess on this one.
I can do
so
that.
We'll see. If you guess correctly, or if you know this answer, happy hour's on me today.
Oh, wow. The stakes are high.
Yeah, so we're talking about zip codes. We have a handful of zip codes here in San Diego County. Would you like to guess how many zip codes are here in San Diego County?
I should know that number, although I don't. So I'm going to have to guess. How many total zip codes are in the county of San Diego?
Yeah, if you're a postmaster, I would expect you to know this.
Okay. Well, not in this life, I'm not. Maybe in a past life, but nothing's coming to me from outer space. So I'm going to guess how many zip codes? 28.
Okay, 98.
Holy shit. I was way low.
Yeah.
Really?
Really?
How could I be that far off? Oh, 28, now that I'm saying that, sounds really low.
It doesn't.
Yeah,
when I first saw 98, because, we've been studying, we always study zip codes, right? Just based on median prices and inventory. That's how we analyze it. But you never sit there and look at all of them at once and realize there's a lot of zip codes. And so, I share that because, we talk about knowing your zip codes and understanding which ones are dead, which ones are hot. For most investors, that's too many to know.
Yeah.
And so focus on the ones that you live close to, the ones you're comfortable with, the ones that you're doing deals in.
Sending marketing out in.
Right,
those
exactly.
Kinds, that kind of. Well, does that mean happy hour is not on you?
It's on you.
Oh.
Well,
we didn't establish that.
Yeah.
We didn't establish that before the quiz. Although I will buy you a beverage the next time we sit down to have a cocktail.
All right, fair enough.
Okay. Is that the extent of this round of quizzing?
Yeah, that was it.
Okay.
Just, for now.
Okay, for now. All right. So let's shift now to what's going to happen, right? What will happen now? Some say they don't have a crystal ball, but I would. Dan found our crystal ball somewhere in the office. He literally found a crystal. Now I'm going to look deep into this.
I think it was a paperweight I grabbed off somebody's desk.
And I'm going to tell everyone that's listening and or watching, we don't know for sure what's going to happen, okay? But we do have ideas, and we will share what we think will happen, what we hope will happen. And I think more importantly, as we wrap the show up, what can we do, what can all of you do that are listening and watching to study your market or markets to be more in tune with changes as they come, okay? So, if you're reading and studying, and you should be, you know that the rates have gone up. That should slow down inflation, and that is happening.
It is.
So what the Fed needed to do in terms of slowing down inflation is happening. It didn't happen as quickly as they were hoping with the huge change or rate increase of 1 point that they did, a number of weeks ago, or I should say last month, but it is slowing down. And that is a good thing, because that was the intent of the changes, and it affects our market. Rates are feeling and actually starting to stabilize a little bit. We look at them daily, as you know, Dan, and that's a lesson to everyone. You should be looking at interest rates on a daily basis, because when the Fed changes their rates, it doesn't immediately affect interest rates that people look at to borrow money for real estate.
Right.
So, but you should look at it daily. You should be looking at what interest rates are going on with interest rates daily. Why don't we give them a referral of the site that we use? You good with that?
Yeah, sure. It's Mortgage News Daily.
Yeah. So mortgagenewsdaily.com is a great website. We don't get any benefit for sharing that with everyone, but it is a very good website, and they have an app, and that is where we go to look at our interest rates.
And that app will actually push you a notification for that day of what the current rate is. And, it's important to look at it every day, because, I was thinking back in years past, we would look at it like once a week, because rates would not change that much. A rate could be the same for 3-4 weeks at a time. Yeah. And it's changing every day. Up a quarter point, down a tenth. It's just there's too much fluctuation. So we just want to be on top of it.
Yeah. So when the Fed changed or increased rates most recently, our interest rates for for our industry of real estate, different types, the rates actually went down shortly thereafter.
Mm-hmm.
So again, it's not a direct correlation when the Fed makes their announcement, basis points. Sometimes interest rates, the things that affect interest rates in our real estate market, they are already like built into the projections of what's going to happen. And so, but you got to look at it daily. So rates are starting to stabilize, and I also feel like, and this isn't necessarily documented with hard data yet, but buyers are starting to be more comfortable with the fact, and they will continue to be more comfortable if rates don't dramatically change on a daily basis, but they're becoming more comfortable with the fact that they're going to need to pay a little bit more for the homes that they're buying and the money that they're borrowing.
Yep.
But if you compare that against what also is happening in many markets, not all, but pricing is stabilizing as well, and also coming down a little bit. So that buying power, so that buying power, while it's changed because of interest rates, you're able to get buyers are able to get better deals on properties.
Yeah, it's a good time to be a buyer.
I would agree.
They have less competition right now. There's a podcast we did where we talked about a property getting 40 offers.
Yep.
That's not going to happen anytime soon.
Mm-hmm.
So, for a buyer to compete with 3, 4, 5 offers, you're getting a more stabilized rate. You're getting a lower price. In some markets here locally, we've seen 10, 15% drops from from the peak. So it's a good time.
So that's what's going on now. The Fed is still working on getting inflation where they want it to be, which of course will affect what happens, and what happens from there. And interest rates are starting to stabilize a little bit.
Mm-hmm. And let me add one more thing with interest rates too, because we talk about the mortgage rates for buyers, but as investors, which we are, we also have to talk about the cost of our money, which we leverage. If it's a line of credit or hard money lenders, rates are going up, so we have to proactively adjust our deal analyzer to account for those more accurate rates.
Good point, because we're as investors, we're not only sellers, we're buyers, and we're buying. Obviously, we're borrowing money, or if we're using our own money, there's an opportunity cost. But if you're borrowing money, you're right. You got to adjust your numbers to reflect whatever the rate that you're borrowing money at to do your deals is being charged at. So we'll talk and kind of wrap the show with what are we doing at CT Homes LLC. Now we'll sell, upwards of and over $60 million of real estate this year in San Diego County by the time the year rounds out. We do 100 transactions each and every year and have for a long, long time. We certainly we've been in the market. This is our 19th year. So we've been in the mortgage meltdown time frame. We've been in up markets. We've been in down markets. We've been in flat markets. We don't have all the answers by any means, but I will share for those of you watching and listening. Dan and I will talk about what are we doing right now to stay ahead of and abreast and educated on the market, and how are we also underwriting our deals to make sure that we're factoring in, pros and cons. So first off, you have to know your market. Now that's an obvious statement, but when I say know your market, it's not just the zip code that you're investing in. I mean, it's knowing what the population is, what the income is, what the job growth or lack thereof are, the median price point, the actives, the pendings, the total available inventory. I mean, it's being hyper focused, like micro focused on the markets you invest in, not just the county, and certainly not just the state, but a zip code or sub neighborhoods within a zip code.
Yeah. One of those zip codes, 92127, that's Rancho Bernardo, as you probably know. Apple's moving there.
Yep.
That was announced that they're
just announced in our market here.
Yeah, $460 million. They bought the old HP offices.
Yeah.
And they're going to bring 5,000 jobs there. So, as we're talking about knowing our market, that's a zip code we're going to focus on, because that's, as they bring that many jobs there, and probably high-paying jobs, that's going to be a strong market going forward.
So what Dan's describing right there, it doesn't affect everyone because you don't all invest in Rancho Bernardo, but it's a lesson to all of you listening and watching that those are the kinds of things that you want to pay attention to, and when you go daily to look at news in your marketplace, look for whether
if Tesla's going to go open a plant in your backyard, you should, you want to know that.
Yeah. So you want to carve out. So what I would suggest everyone do, if you're not already doing it, is daily carve out, some time to go online, whatever sites serve you best in your marketplace, and research the best news in your local market. Not what the 5 o'clock, CBS news station wants you to see and hear. But like, really, what's happening? Are businesses moving into your marketplace? Like that news of Apple, that's a massive announcement, and it continues to drive, obviously, income and someone's employment, but it also helps people with their confidence in buying things like real estate. And
yeah, I want to live there.
I want to live there too.
If Apple's there, I want to be there.
You know, and so that's a key thing for everyone to do is when you're researching your market. It's not just numbers, but it's also those kinds of things. Employers coming, leaving. Are big employers in your area hiring, or are they announcing massive layoffs, right? Because those kinds of things are going to affect the buyers for your property.
It goes both ways.
Yeah. So, and do we do this? So we do this daily. Like all of us as a team at CT Homes, we research our local market and our national market and the different, whatever apps or online resources. And then we discuss it weekly as a team. Dan and I are talking about these things daily, literally, because our offices are next to each other. So when he reads something or hears something or something pops up on a notification on your phone, we're talking about it because it affects what we do. So if you're kind of looking at numbers when you finish a transaction and you're not quite sure what the median price point is or how many total properties are available in your marketplace, now more than ever is the time to change that. I mean, you want to be rattling off those numbers very quickly and track them.
Yep, and then also for analyzing too, we need to adjust how we do that. Typically we go back 6 months to pull actives, pendings, and solds. Obviously, active pendings are now, but the solds. And so, the March solds are not the last 30, 60 days sold. So I had an example last week of an agent who sent over a deal and said, here's the after repair value and here's the comps. And all those comps sold in March and April.
Completely different.
Different. And so I ran my own comps and I came up with a valuation $100,000 lower.
There you go.
And that is the real market data.
Yeah.
Because we have to focus on what's happening right now. Yep. So a quick way to do that, in your filter, you can just go back 90 days instead of 6 months, so you can see what's happened more recently.
Very important message there and lesson that Dan shared is when we're researching and analyzing our real estate, we want to go back into a time period that is most closely reflected to what's going on right now.
Yeah. And
like he alluded to, if we go back and pull comps from March, which isn't that far away from where we sit today, it was a completely different market. Rates were way different. The buying, selling situation was different. So analyze your deals in the current environment that you're in, which, will change, always does change, and sometimes it changes very quickly. So we do, like Dan said, that's what we're doing. The other thing that we're factoring in when we're analyzing a transaction is we're stress testing it against not appreciation, but depreciation as well. If for some reason we don't see this value holding up, or this value doesn't hold up because of factors that we don't know about yet or we don't control, and we actually get depreciation, do we still feel confident in this deal?
Right.
And so everyone should be either taking a mental note if you're not, if you're driving and listening to this and not writing down, or writing down if you're taking notes, is stress test your deals against the market not even staying the same, but actually going down. And does it make sense, or do you find yourself feeling a little iffy about it, and then you either got to buy it lower or pass on it?
You should buy it lower, or pass on it. You're right. But it's, what's worst case?
Yeah, what's the worst case?
You kind of have to think of what is worst case right now. And again, every zip code is different. There's some zip codes where we can use comps from March because they've still gone up.
Yeah.
But looking at other comps, that's how we're looking at it. Have they seen a 10% depreciation? Are they going to see a little bit more? Probably.
Yep.
And so we're gonna factor that into our numbers so that when we go to sell it in 4 months, we're hitting our numbers, and then we're not sitting there scratching our head like, what happened? How we missed that?
Yep. That's very important. And then at this, there's other things that if we're renovating homes, we have to look at as well. What's the pricing of the materials that you're buying? Are there longer lead times? Like those kinds of things you have to factor into your analysis now. And so if you're not tracking those, you got to start tracking them and understand, normally can I get the property rehabbed in 2 months, but because of lead time on certain goods that I'm using, it's going to take me longer. So you analyze it properly. Another key thing that we're doing is we're also looking at multiple exit strategies. CT Homes is built around buying, fixing, and selling homes. That's what we do 99% of the time. But we're also now analyzing against, if the market, if we can't get out of the home at whatever price, is there an alternative strategy to rent that out? in other markets, it's easier to do that. In San Diego, for example, and other markets like it, the price that we pay for the asset, it's hard to justify because the rent isn't going to even break even.
Right.
But that changes across the country, of course, and rents have gone up in many, many markets. But the point is, look at multiple exit strategies. Can you do short-term rental? Can you do intermediate rental like traveling nurses or doctors? Can you do a long-term rental on it? If you had to, as opposed to sitting on it and continuing to drive up costs and not have any income come from it.
Yeah, and especially with condos, like right now, in the last year it didn't matter. You could buy, fix, sell a condo. There's always a buyer, but those are the ones that get affected the most, that have the rental restrictions. If they're not VA or FHA approved, those are harder to sell in a market like this. So just be very cautious when you're looking at condos, what those restrictions are.
So that's the bulk of what we wanted to cover. I would say key takeaways from this show that hold up in really any market is research your nationally and locally, right? Know your numbers. The things that I would suggest everyone take away from the show is daily now be looking at the national level. What have rates done? Any other news or announcements that directly affect our industry? Looking at that daily in our sub-market or our actual market, our micro market, if you will, you got to know the stats like the back of your hand and track them on a spreadsheet. So we track them on a spreadsheet. We have now for many, many, many years, and we look at it as a team. So it's not just enough to look at the numbers, but you want to track it and chart it, or get to a place that does that in your marketplace, so you can see what's happening, and it can project out trends of what may happen. That's very important. When you're analyzing your deals, be very specific on the data that you're pulling to make sure it's reflective of the market, the actual time period that we're in, not going back too far on comping, understanding what supply chain issues are doing to your properties in terms of delaying construction, and then looking at multiple exit strategies as well, because that can give you some more confidence to go forward with the deal if you had to change gears and you couldn't sell it. Do you have another option?
Yep. And the last thing I want to talk about, if we have a couple minutes,
we do.
Looking ahead, the market is what it's doing right now, but when we do project ahead, it's likely that we're going to see more NODs, and so that's notice of defaults. That's foreclosures. So, in the last couple of years, when the market accelerated as fast as it did, nobody had a short sale. Nobody's going into foreclosure because you can sell it. Everybody had equity. That's literally what was happening. So now we're at the point where if some houses are actually lower in value, if they were purchased like in the last year or two, and the recession, let's just say, drags on a little more, and then with job losses, there's going to be some short sales. So that's something to keep an eye on in your market. Get familiar with short sales, how they work, and you can market for pre-foreclosures, and then those are the assets that you want to target in this type of environment.
That's a great point, right? These types of markets create different opportunities that maybe haven't been available for a long time, like Dan's talking about short sales.
We haven't done a short sale in 2 years for sure. Exactly,
because of what the market's been doing. Everyone's got appreciation. I mean, there were time periods where we've had dozens of short sales going on, and we have an excellent, Mary's her name, short sale negotiator on our team who does many other things, but she's been chomping at the bit to get back in there and negotiate short sales, which we'll have more of as the market continues to change. I think to round out, because this is a common question people have, I've gotten, I know you've gotten, is now a good time to invest in real estate?
Good question.
It's a great question.
Yeah.
And my answer always to that is anytime's a good time to invest in real estate if you're investing properly. Now, that's a very general statement, but my point is, if you're in tune with your market, these kinds of markets that we're in now and will continue to be in for a period of time can create massive wealth, and you can really find yourself, in a good position if you buy right.
Yeah. Right? When you look back, this last year when the market was just crazy, and there's so many investors, and a lot of speculating happens.
Exactly.
And when we're buying, which we feel like we're offering the highest we possibly can, then we find out somebody offered way higher, and they closed on it. It's like, what are
Mm-hmm.
they looking at? They're speculating.
Yes.
And so at this point right now, a lot of investors are on the sideline, like some buyers, just waiting to see what happens. It's a good time to be an investor because we get the best opportunities. We're ready to go. You will get a better deal because you're there and you're ready to perform. There's always motivated sellers.
Yep. No, it's a great time to be in real estate if you're studying the market and if you're buying right and if you're analyzing right. This type, with rents on the rise and property values slowing down their increase, you can find yourself in a great situation to pick up a couple of key rentals that can be your retirement fund for years to come. Right? It's a great time. It's a good time to be in real estate, and I know it's different than what it was the last 2 years, but real estate markets always change. That's one guarantee I can give everyone watching and listening is the real estate market's going to change. So what you do in that market when it's changing can make or break your business. So this show, other resources that we offer, like if you go to FortuneBuildersShow.com to register for one of our trainings. You have access to the boot camp summits that I talked about, like Orlando coming up, or you come to Real Estate Ignite at the end of the year. Those are the kinds of things that will keep education in front of all of us and put you in a stronger position to take advantage of what the market's doing. Because it's not. I don't know, quote my brother again, which I don't think I've only done twice in my life, quoting my brother Paul.
That's probably the first time I heard you say this.
Well, it's a pretty. I'm going to paraphrase the quote, but. As a real estate investor, my brother said over the years, it's not as important what the market's doing. It's more important what you're doing when the market's doing what it's doing.
Okay. Yeah.
Did you get that?
Got that.
Yeah. It's I can't say it's a quote that you're going to go find on quotes.com, but the point is, the real estate market, what the real estate market is doing is vitally important. But what's as important and sometimes more important is how you're positioning yourself strategically in that market so that you can take advantage of what's coming or what may come or what does come. So it's always a good time to be in real estate.
I mean, think back to 2010.
Yeah.
Anybody that bought rentals back then or just buy and hold, it's, you look back and it's like, wow, why didn't I buy more?
Exactly.
We're in that zone right now.
Yep. So those are the things that we wanted to cover. We'll continue to bring, information as we have it on this show, right? What we're doing in the marketplace, what's the changes that are coming, but there's no substitute for studying your market daily and using sound investing principles when you're analyzing, rehabbing, selling. As always, we appreciate everyone's feedback. We appreciate you being here listening and watching. We love feedback. We love suggestions. So, below the video that you're watching here, or if you're listening, you can go to FortuneBuildersShow.com to get more information. Give us some suggestions, give us some likes, share the information, and hopefully before the end of the year, we'll see you at either a bootcamp summit or Ignite. I know, Dan, you're going to be at Ignite. We got a team trip planned with CT Homes where we bring ourselves and a +1, and we come out and we all dive into the education. That's November 11th through the 13th. We appreciate everyone being on the show. We always appreciate listening and watching. We enjoy doing the show and open to feedback and suggestions. So bring it to us. And let me tell you, we'll see you on the next show coming up very soon.